Hey everyone, welcome back to your weekly market outlook. This is for the 13th of January 2025, and I think we have one more full week for the Biden administration. Trump is going up next week. All right, let's take a look at some of the data last week. A lot of market moving event. I think it was a huge surprise. We'll just focus on the NFP numbers here. The FOMC meeting minutes didn't tell much about what's really going on. I think it's pretty much more or less a hawkish stance, or a little bit more of a cautious hawkish stance coming out from the FOMC. But NFP numbers, this one here was a huge leap up from the consensus. We got a consensus climbing up last week, starting the week from 150,000, ending up to about 164,000 for the NFP consensus. We got 256,000. That's literally 100,000 above the market consensus from the beginning of the week last week. Also, the unemployment rate has dropped down from 4.2% to 4.1%. So we're looking at a very strong labor market here, and obviously this brings in a lot of concern for the market, especially the equity market. We saw a huge sell-off in the equity market. We saw a huge jump in the US Treasury yields, and that obviously lifted up the US dollar. And the concern here is that with this kind of labor market, it's so strong that the market is basically not anticipating any rate cuts from the FOMC. I think market is currently pricing in for less and less rate cuts in 2025. I think the first rate cut that is expected by the market, it's currently priced in at about June, and that's still about 45%. There's a lot higher expectation for a rate cut towards closer to the end of the year, basically at the beginning of the at the beginning of the fourth quarter for 2025. That's basically what the expectation is for the first rate cut that the market is expected to see in 2025. Obviously, it is severe in terms of the risk aversion that we saw in the market last week, but that's basically the main driver on why we see that meltdown on Friday there. All right, this week we're going to be focusing on the inflation number here. Obviously, taking a look at this, Japanese market is closed on Monday. PPI numbers is going to be released on Tuesday. CPI numbers, again, if we take a look at the CPI number here, there's a consensus for a higher inflation here from 2.7% to 2.9% for the headline inflation. And in terms of the monthly growth here, obviously the core CPI is expected to go down a little bit, but monthly CPI growth, it is basically at 0.3% unchanged. But yeah, the expectation for inflation to continue to bounce up here, that could see the market pricing in before heading into the release for the more hawkish FOMC. But that's that coming up from this week. Other than that, we have the retail sales numbers on Thursday, but I think a lot more focus this week. It's going to be on the Wednesday when the CPI number is actually going to be released in the States. All right, let's just jump straight into the technicals, and we can see the meltdown that has been going on in the market here. The Aussie USD lost a lot of critical support level. 62 cents has been broken at time of recording. Price is barely below 61.50. You can see the pressure here on Monday continues to weigh on the Aussie USD here. The next available support level is actually below 61 cents. We're currently looking at support 1 at about 60.88. Support 2 is closer to about 60.32. Now, obviously, if this continues to play out, if we continue to see a stronger US dollar leading up to Trump's inauguration here, obviously on the back of a potentially higher inflation number, that could push the Aussie USD down a lot closer to 60 cents. The concern that we have here, if we take a look at the fall here from October, it's basically a non-stop fall on the Aussie USD. And in terms of how far it has fallen, we're looking at about 11 to 12% on the Aussie USD. This is a significant fall, and I think this is overextended. But again, We're not going to be on the side where we want to pick bottoms on the Aussie USD. We're still going with the flow here. I think there's still a lot of selling pressure on the Aussie USD here. In terms of resistances, we're taking a look at the weekly pivot coming in at about 62 cents. That's going to be the first resistance. And then beyond that, we've got 62.50 where the resistance 1 is located. And that is still lower than last week's high, which is a serious concern on the Aussies here this week. All right, next is the Euro USD, pretty much the same scenario. We have that resistance trend line capping the market. This one here is a little bit more predictable. We were looking for that resistance trend line to cap the market from progressing any higher last week. And that's basically what we got. We dropped below 1.03. We're still holding above 1.02. So key level to watch out for, immediate support is going to be at 1.02. But losing 1.02, if you take a look at where parity is located, it's not that far away. In fact, it is still actually between support 2 and support 3 on the weekly pivot in terms of where the parity is located. But again, 1.02, that's going to be our immediate support. Below that, we got 1.01, and it's progressively going to get tighter, 1.0050, and then parity for the Euro USD. But in terms of direction right now, it is still strongly to the downside. Again, I wouldn't be recommending picking bottoms in a market like this, where the downtrend is so strong. We just don't have enough catalysts to identify a potential reversal as of yet on the Euro USD, or even a technical correction at this point in time. Pound USD, very similar situation here. We cut through 1.23 like butter last week. Continues to drop down, and obviously this is also pressured by the bond markets in the UK, where the gilts has also been dropping down like crazy. So we do have a little bit of a crisis in the bond market. We are looking at bond prices dropping off like a fly, and that puts a lot of pressure here, especially on the pound USD. You can take a look at a Monday's price movement here. Immediate drop below 1.22, and it just continues to drag down below 1.2150 here. Next available support level for the pound USD is not until 1.2, and you know it does says a lot, considering that where we were from 1.23 last week, we're looking at about 200 pips drop right now estimated for this week. Again, the 1.2, it's more of a psychological price level. If we take a look at the positioning on the support 1 and the support 2, it falls above and below that 1.2 level. So we're keeping an eye out on 1.2, and we are definitely looking at 1.23 and 1.2350 to cap any further progress on the pound USD, unless we have a catalyst that could bring risk sentiment back into the market, that could push down the US dollar a little bit, that could take down the US 10-year treasury yield down a little bit. We don't have any reason to start picking bottoms and start going long on the pound USD. This is a clear downtrend on the pound USD. All right, lastly, we have the dollar yen. This one here, this is actually a surprise to me. We were looking for that grind towards 159, but you can see what's going on here. Price was actually not able to even touch 159. It came very close to it. High was at 158.87. We're 13 pips away from 159. You can see that it's just pausing there for a little bit. So dollar yen, you know, the Japanese yen, it's actually holding its ground really well against the US dollar here. It is fighting back, and there is actually a couple of concern and reason why the Japanese yen could actually be in this position. Obviously, number one is the potential for intervention. That could be a risk of intervention. Number two, we're still not quite sure in terms of Bank of Japan and how their interest rate hike schedule is going to be for 2025. So it does put a lot of yen traders on a cautious foot here. But yeah, right now, if we take a look at the current positioning here, we are looking at tops coming in very closely here. As long as 159, 160 holds, we're not going to be looking at significant gain on the dollar Japanese yen. In fact, we still stick to the scenario where we could actually see that sell-off starts happening. We might see carry trade unwinding happening around 150 and on 160. But this one, as it is, this is currently stuck within range. We are currently looking at 156 to 159. It is a 3 yen range. It is a huge range for the Japanese yen. So a lot of caution if you're trading the Japanese yen this week, especially ahead of the inflation number, which everyone is basically going to be looking at the inflation number there and trying to pick for any weaknesses or whether or not inflation is actually going to be on the softer side. Because traders are just basically looking for reason to get back into the market. They're looking for risk appetite to return into the market, but we're not going to see that risk appetite comes back into the market if inflation continues to grind and the expectation for the FOMC to cut interest rates gets dimmer as we go. This is only January. This is only the first 2 full trading week of January. All right, so with that, good luck with the trades, and I'll see you soon.